So over the past month, the Indian stock market is down by about 6% and it has dropped over 7% since its all-time highs earlier in September. And this is just the large cap we are talking about. So we see a similar story unfold when it comes to the mid cap and small cap sectors as well. But what is the reason behind it? Let's dive right into it in today's video. Hello everyone, my name is Ankit and I'm a financial data scientist, and on this channel we talk about everything related to finance. So today we will be discussing about the recent dip in the Indian stock market, what could be the possible reasons and whether it is a good buying opportunity for you. Let's get right into it with reason number 1. Foreign institutional investors are pulling money out of the Indian market. So why is this happening? Well, this is likely linked to the recent stimulus package announced by China. Let me know if you want a video on that in the comment section below. But likely, international investors are pulling money out of the Indian market and rotating it into China because they think that it is a better prospect in the coming months and probably years. And reason number 2, the market was overvalued. So if you take a look over the past year, Nifty 50 had rallied over 30% if you exclude the recent dip. So it was time for a cool off in the market as well. Finally, reason number 3, second quarter earnings for a lot of big companies have not been great, contrary to the last few quarters. Not bad, but not been exceptionally good, which again urged the investors that it is time for a cool off in the market. So the next big question is, will the market recover from here or will it continue to crash? Well, I think in the short term, no one can really predict what will happen. But if you have a medium to long term outlook, I think there's no reason to worry about, because there is no fundamental reason why the market should be crashing right now. So one big reason is the international market situation right now. If you look at US and Europe, they are trading at all-time highs. And the Indian market, generally speaking, is highly correlated with the Western markets. So since there is no issue that is pulling down the world equity markets, I think this dip is simply a great buying opportunity for us investors. And reason number 2, mid cap and small caps have not crashed. So when I say not crashed, I mean that when the markets are unstable, the small caps are usually the first to collapse. But in this case, we saw that they also went down, of course, along with the rest of the market, but about the same amount as the large cap. So this suggests general strength in the market, and I think in the near future, we will see a bounce pretty soon. So considering these factors, which companies should you be investing in during this dip? I have my eyes on 2 particular sectors, but before I give my take on this, I want to clarify that I'm not a financial advisor and these are simply my opinions based on market research. Also, if you're enjoying the video so far, hit the like and subscribe button below and drop your suggestions in the comments if you want me to make a video on any particular topic of your interest, of course related to finance. So the 2 sectors that I am very keen on are tech sector and finance sector. So what you see on your screen right now is called the Nifty IT index. This basically picks out the IT companies from the general Nifty 50 index. And why this is interesting is because if you look at the value change over the last 1 month, it's minus 0.25%, which means it is practically at the same level as it was 1 month ago. Now this is interesting because the rest of the Indian market has been crashing. So Nifty 50 is down like 7% from 1 month ago. So when the rest of India is crashing, the IT sector in India is about the same as it was a month ago. And this is great because this shows that there is strength and resilience in the IT industry in India. So if we take a deeper look into the constituent companies of the Nifty IT Index Fund, we see the companies like HCL Tech, Wipro, Tech Mahindra, Persistent Systems and Coforge have actually gone up over the past 1 month when the rest of the Indian market has been trading downwards. Even if you look at the long-term returns, let's say the 3-year returns, we see that Persistent Systems has gone up 184%, which is massive for a 3-year period. There are also companies like HCL Tech 62%, Coforge 53%. So these are companies which are also great long-term buys. So the other index I find really interesting is the Nifty Bank Index, and what you see on your screen right now are the top gainers and top losers of the Nifty Bank Index. So let's look at the gainers first. We have Bandhan Bank, Bank of Baroda, Punjab National Bank, ICICI Bank and AU Small Finance Bank. So they have gone up 10%, 4.5%, 3%, around 2.5%. Pretty good returns considering that over the last 1 month, and these are all returns from the last 1 month by the way. Considering that the rest of the Indian market has been going down, I would say this is pretty good. Now let's look at the losers. Axis Bank minus 1.5%, Kotak Mahindra minus 1%, Federal Bank minus 0.67%, HDFC minus 0.5%, and IndusInd Bank being a top loser, it has still gone up 1.27%. So this again shows the same story, that the banking industry in India has strength and resilience, and this is probably a pretty good buy looking into the future right now. And I think the finance industry in India has great potential in days to come, and it is a good buying opportunity for some of these stocks. So if any of these sectors look promising to you, you can choose to invest directly into these indexes, the Nifty Bank Index or the Nifty Tech Index or the IT Index it's called, I think. Anyways, you'll figure it out. And yeah, you can invest in these indexes, or you can pick out individual companies from these lists and just invest in those companies that you think have prospect in days to come. Alternatively, you can just buy the Nifty 50 index fund and stay invested in the large cap companies in India. That is also a great approach and works out great over the long term. But the important point I'm trying to make is this is not the time to panic sell and pull out of the Indian market, because I think this market has a lot of prospect in days to come, and this dip is simply a buying opportunity for investors like you and me. Thank you for watching Dimes to Dreams, and I'll see you in the next one. Bye bye.